Time for us to take a look back on some of our past trades. Now, last week, Dan saw trouble ahead for Chinese markets.
When the FXI was trading 35.5, you could buy the February 35.31 put spread, paying $1 for that, buying one of the Feb 35 puts for $1.25, selling one of the Feb 31 puts at a quarter.
Chinese stocks have dropped even further since then, putting Dan in a pretty good position on this trade. So, Dan, what's next?
Yeah, so I expect this index to continue to be choppy. I think it's important to remember the Shanghai Composite is down 12%. It's one of the worst acting equity indexes in the world right now, and I think that that could be a source of some of the volatility that we were to see, if we were to see any, in January and February, just like this past January and February. So I think you want to keep this on, and at some point, if we did have a sharp drop, I would look to kind of roll it out a little bit and down. So rolling out in expiration and down a little bit, take something off the table and keep and keep the trade on.
I'm with you, Dan. I mean, this was a big week for Shanghai, and we know that the Hang Seng was now down 20% from its peak and looks like bombs away, plenty free to move lower.
All right. Also, last week, Cohen Carter said to just sell Nike into earnings.
You have the problem of massive outperformance long-term and more recent underperformance. This suggests much more to go.
We're going to be targeting 47.5. I don't know how that worked for you. I mean, that's down about 7% or so from where it was when I was looking at this earlier.
Well, the stock is flat since then. So, Carter, what do you see in the charts?
Yeah, meaning what's interesting is, so as the stock's flat, the market's up, which means it's an underperformer, made a new two-year relative performance low. Nike looks like it's heavy. Its news couldn't help it. Want to stay short.
All right, so Mike, you stick with that?
Yeah, I would, and I think the way to do that, because you've still got a little bit of decay in the put spread, is look to sell call spreads. They're not going to report their next earnings until after March expiration, but I'd probably look to February. Sell some upside call spreads against that to help offset the decay and keep the put spread on.
Dan?
Yeah, this stock was trading close to $55 in the aftermarket after that report. It's down less than 52 right now. I mean, I think Carter's spot on this thing. I'd like to be constructive about the stock, but near term, the price action is so poor.